What does the fall of FTX mean for the future of crypto? The year 2022 was not the best for cryptocurrencies. A sharp fall in Bitcoin prices, the collapse of the Terra Luna network, and a new cryptocurrency tax regulation in India has exacerbated the miseries for investors in the industry at large. However, the flash market crashes have become much more intense after the shocking crash of the FTX. On November 9, Binance announced the agreement to acquire FTX, possibly to withdraw later. Since then, FTT has lost almost 80% of its value in the last week, reducing the total circulation value of the tokens by nearly $308 million. It has seen losses in prices, with today's value down 9% to $1.66. Later, on November 11th, FTX posted a tweet expressing concern about filing for bankruptcy. On this, Josh Peck, founder of True Cold Capital, speaking with Financial Express, said, "FTT has been overtaken by the declining value of the token and the higher probability of total loss by continuing to hold it. Just like the Terra Luna tokens in the beginning of the year, FTT could become useless in a few days." Is crypto winter on the way? This week-long story of financial mismatches have affected cryptocurrencies on a different level. The value of Bitcoin has recorded unexpected lows since 2020, with the value of altcoins such as Cardano, Solana, XRP, and Dogecoin tumbling more than 10%. Digital assets are under pressure due to the FTX crash, which removed $180 billion from the cryptocurrency market. Ethereum price has plunged nearly 20% month to date and was trading at around 1,255 on November 15th, according to data from CoinMarketCap. Since 2021, the overall market capitalization has fallen below $1 trillion, falling below the $900 billion market. Users who engage in FTT lending and lending will experience a liquidity crisis due to the loss of funds. All of this is due to the FTX Binance drama. Puneet Agarwal, founder of CoinX, a cryptocurrency tax platform, said FE, "Deals and collaborations are turning sour for FTX." FTX raised $1 billion in June 2021 from venture capitalists including Paradigm, SoftBank, and Sequoia Capital at an $18 billion valuation. 3 months later, FTX received $421 million from investors including Ontario Teachers Pension Plan, Tiger Global Management, and Singaporean government investment firm Temasek, bringing its valuation to $25 billion as of September 2021. Between them, the two largest shareholders, Paradigm and Sequoia, declared a $0 investment in FTX, meaning all the money they invested was lost. Earlier this year, the value of FTX's investments plummeted to $350 million, making it the largest loss ever suffered by an outside investor. However, the fund's loss of $150 million was offset by nearly $7.5 billion in unrealized and realized gains from FTX, along with other losses from Temasek and Paradigm. Cryptocurrency values were declining in January of this year, but FTX was early. Investors contributed another $400 million to FTX, which sat at a peak valuation of $32 billion, much of which they had previously invested in previous rounds. The capitalization table from Forbes showed the losses suffered by investors listed below due to the FTX bankruptcy. On November 11th, the Bahamas Securities and Exchange Commission made the decision to freeze the assets of the FTX digital marketplace and began investing the mismanaged assets, calling the action illegal and saying the company would be placed in interim liquidation to preserve the assets and stabilize the company. Since news of the FTX deal broke, major sectors have been hit hardest by the crash. Like other cryptocurrency companies, FTX has made significant investments in sports sponsorships. In the wake of pending bankruptcy announcements in the US, NBA's Miami-Dade County and Miami Heat ended their partnership with insolvent cryptocurrency exchange FTX and are now seeking a new rights partner for its arena in the US downtown Miami. FTX used to be one of the authorized Bitcoin trading partners of the Mercedes-AMG Petronas Formula One team, but will no longer be able to brand FTX after Mercedes cars opted not to carry its logos, thus suspending its sponsorship deal with the struggling company. As a first step, we have suspended our partnership agreement with FTX, said a race fans representative. Signed in April 2022, another Brazilian organization, Furia, ended its sponsorship deal with FTX. Furia co-founder Andrea Carr announced on Twitter, "What does the future hold?" What began in 2019 between Zhao and bankman-fried led to a massive crisis in the cryptocurrency economy and raised questions about the future of cryptocurrency investing. Similar to India Today emerging tech about the future of cryptocurrencies, Prayag Singh, co-founder of Sockley, said, "Clients are unable to withdraw their funds and are therefore stuck. We can expect to see the effects of this ripple across the cryptocurrency industry in the coming days, but only for a short amount of time. The fallouts are a strong argument for why we need decentralized systems like DeFi. We will see increased transparency and widespread adoption of a decentralized system. This block will force Web3 companies to build better solutions and develop effective rules for assessing systemic risk." In a recent interview with India Today, WeTrade CEO Prashant Kumar talked about the regulations needed in the industry to make it more promising. He said, "The fallout between Binance and FTX has major consequences for the entire crypto market. As we have seen, cryptocurrencies around the world have suffered losses. However, the incident has raised the need for regulations in the industry. Binance's step to launch an industry recovery fund to help projects during a liquidity crisis is a positive step in that direction." FTX under investigation. FTX CEO Sam Bankman-Fried stepped down and his replacement, John Ray, took over. Following the announcement of FTX's bankruptcy proceedings, Amy Wu, director of FTX Ventures, also resigned, followed by mass employee resignations. As of November 8th, FTX's institutional director Zane Tackett has already resigned. In a tweet, FTX's estimate represented nearly 130 companies in the FTX group involved FTX trading, FTX US under West Relmshire Services, and Alameda Research, all of which have filed for bankruptcy in the US. In the aftermath of the incident, Alameda Research employees all collectively resigned. 5 takeaways from the FTX crypto exchange collapse. Unlike traditional financial institutions and exchanges where the money of investors and depositors is protected, cryptocurrency exchanges are much riskier. The reason is that given the nature of cryptocurrencies, exchange users need to transfer ownership of their holdings for the exchange to take place, meaning they are no longer depositors but creditors. This is why crypto traders should never hold their holdings on an exchange like Binance or Coinbase. Given the volatility of cryptocurrencies, when prices fall significantly, investors have to sell quickly, and this can make the exchange unable to meet investor liquidation requests, meaning users could have a hard claim on their cryptocurrency holdings. FTX isn't just bankrupt, it has filed for Chapter 11 protection in the Delaware Bankruptcy Court, which favors a reorganization aimed at satisfying the claims of creditors, in this case mostly merchants. The bankruptcy filing was preceded by a week of panic over the financial health of the stock market and a spike in withdrawals that only made matters worse. The end result remains unclear. The FTX episode could mark another step towards the once-and-for-all collapse of these privately issued unauthorized cryptocurrencies. There was some optimism over the past month that once the dark clouds on the horizon caused by the pandemic and the war in Ukraine fade, cryptocurrency prices will recover. Now apparently, something more structural is happening, revealing that since in the absence of a full acceptance of cryptocurrencies, the price depends only on the willingness of investors to hold them. However, there is some good news to come from the FTX crash. The revelation that cryptocurrencies may not be the golden goose for unsophisticated investors is a welcome development for the markets. In the microstructure of the market, these investors are called irrational traders, often exploited by more knowledgeable traders. In the past, unreasonable traders have had too much impact on prices, which is not desirable for an efficient market to function. Once they are gone, we could end up with a market that values cryptocurrencies for what they are truly worth. With that being said, it's time to end today's video. Press the like button and subscribe to our channel for more interesting stuff.